Okay, so here is day two. I wanted to review today. Today was absolutely incredible. I want to cover three main topics in this review, and it should help clarify some questions that have come in. The first one is just the topic of simplicity. And what I am referring to when I say that is that, a lot of traders, especially traders that have been trading for many years, most traders will go through different types of courses, whether that be courses that they purchase or their own study of the market. And as you do that, most traders will run into different types of methodologies that require a tremendous amount of face time. So in other words, being in front of the market for months and months and months and hundreds, if not thousands of hours to acquire the ability to quote unquote analyze the market. The box analyzes the market for you. And so you don't need to worry about if the market's going up or down, if a stupid MACD indicator, excuse my language, is crossing or whatever. None of that matters. The sophistication of the box, and I'm not going to get into it, I think would blow most of you away. And I say that because, as I've mentioned or may have mentioned before, the algorithm that the box contains maxes out the allotted code lines in NinjaTrader. And so the other reason is that most of the things that I would explain to you, which I will not, that the box measures, 99% of you would not understand. And so it's pretty much pointless. And we would also get into things like high frequency trading and some other topics that wouldn't make a lot of sense to a lot of traders. And so it's really besides the point of what the box is detecting. And so all you need to know is that the box identifies an area that there's a high probability situation that's forming. And so, and you don't need to take my word for it. You can go back in history and validate that yourself. And I'm sure most, if not all of you have. And so this high probability area is not identified by the width of the box. The width of the box is set at a standard width so that you can actually see it. We could shorten it, we could widen it, but we chose this width so it was very easy to see. The price levels we want to be concerned about is above and below the box. And so when price closes above the box, we get this arrow, okay? And so what this arrow tells us is that there's a high probability that price will head in this direction. This arrow doesn't tell us that, it doesn't say, hey, I guarantee you price will go up or down if we get a red arrow. It doesn't do that. What it tells us is that there's an extremely high probability that price will go up. And so knowing that the box identifies that, then we can be prepared and we can get in that direction, if you choose to, obviously. So this is the NASDAQ. I'm going to review three markets today, just in the interest of time. I'll try to make this video a little bit shorter. And so this is just 9 minutes after open. And what's beautiful, as I've already mentioned about the box, is that a lot of times it'll form and give us plenty of time to get in. Not every trade is like that, but a lot of the trades are. So we get in and we do take some heat. And as I've mentioned in the first video, reviewing day one, remember that price often will want to work its way back to the midpoint, this red line. And so that's fine. So if we're in this, we take a little bit of heat and we see that, okay, we're sitting on the red line and I'm not too worried about that. And we run. And this trade runs for many, many, many points. In the video yesterday, I talked about how to maximize this. You should have been able to get most of this run here. I mean, you're gonna get a fill price somewhere around 30.30. This is again the NASDAQ, the NQ, And I mean, we reach a peak of 30.53. And we get another box here. I'll cover double boxes in just a second here, but we get another box opportunity to go long. We're still long. We're already long, and this thing pushes for over 20 points. And so you're probably out by that time. But this is a huge winner, and the day hasn't even started at this point. We get a long here, and this is another winner, and we get a short here, and this is another big winner. So we're pushing a short at 45, and we peak out at 30. So there's a 15-point run, and then we get a long signal. This is a winner, and we get a short signal at 31-ish. Okay, somewhere around that range. And then we get two long signals. Let me see here. Oh, I have two arrows. And then we get another one, and this one runs long, and that's a winner. And then we get another one here, and this one runs down, and then we run down again. And I think that may have been, nope, we have a couple more. And then around, I'm in mountain time, so if you're looking at the time, this is US mountain time. And so we get another long position, another short position. All these are winners, by the way. And here's that. I talked about this purple line in yesterday's video. So nice, well, let's see, 97, and it peaks out. Well, let's see, where does it peak out? 07, so there's a 10-point peak there. As I mentioned, I typically will, I referenced the ES on that one. This is a little bit different. I'll typically go 2 points on this one, generally speaking. If you don't want to trade, that purple line, then you don't have to, but a lot of times it'll bounce. It has a pretty high win ratio. But we're still, this thing is still short, and we didn't get a box signal. That was it. That last short was the last box signal, which, it is what it is. We just didn't have the specific parameters that the box looks for. So anyways, back to my point. My point is that don't, get worked up about, the box. The box, it's very simple. Blue means buy, red means sell. If it's blue, at least the way we trade it, we buy, and if it's red, we sell. In other words, we short the market. We don't look at anything else. It is what it is. The NASDAQ, I mean, if you traded this today, I mean, if you were up less than 10 points, then I don't know, maybe you did something wrong. I would imagine, if you traded this today, you'd be up anywhere between 10 to 50 points, maybe more, quite easily. And and those of you watching this, if you're part of our test group, you have the box now, and you know that I can't make this up. So these are pretty big numbers I'm throwing at you, and this is real. This is the real deal. And so now if you've looked at some of the posts that I've put on the blog, as difficult as some of those posts may be, you now know that those are real. We don't mess around. This is the real deal. Our floor traders in Chicago killed it today. I can't tell you how much they made, but what I can say is they made more money than most people make in a year using the same tool that you have, and they don't do anything different than what I just described to you. Okay, the other thing I want to talk about is double boxes. So let's look at that real quick. So a lot of times you'll see a box on top of a box, and you want to pay attention to these, and sometimes you'll see three. I think I've seen 5 actually on top of each other. So what's happening here is we have these specific conditions. There's several dozen things that the box looks at, and it measures real-time data rather than lagging information. We don't care about that. All we care about is what's happening right now. And so that's what the box attempts to do, one of the many things. And so if we get another box on top of a box, just like you see here, then typically what will happen is a pretty big run. What direction? We don't know until it happens, but as long as you're following the rules of engagement, meaning that if you trade it the way that we like to trade it. I mean, you can trade it however you want to trade it, but we believe we've found a very effective way to do it, and we haven't had anyone disprove that. So if you find a better way than the way that we do it, please share it. But the way that we do it is that as soon as we get in this case, a blue arrow, we're in. You know, as I mentioned in the first video, market order is going to obviously guarantee you a fill. And we like taking profits at the first run, and we like trailing our stops aggressively. And so this one, you would have won that. Where you get out on any remaining contracts is kind of the way that you trade it. And then we get a short here. So we're still in this double box, which is what I'm talking about now. And so if we're anticipating kind of a big push, well, this was nice. We got a little bit out of that. But now we have a short signal, so now we're short. And so knowing that, okay, we had a double box, this one did not run, so this one's probably going to run. So knowing that in advance, knowing that when we have a double box, generally speaking, in most cases, not every case, but in most cases, the market's going to have a pretty good push. So I want to take advantage of that. So the way I do that is I pull my targets way out of the way. I don't want to get stopped out. I want to take advantage of this. I still want to take profits here because we want to do that because we can have this happen. But I want to anticipate a potential run, and so that's pretty much what we had. So we had a nice little run here. You're gonna 45-ish, and then so 15 points. So you should be able to get between 7 to 13 points of that. And then the rest of the day is what happened. But that's the double box. So anytime you see that, and you should anticipate a pretty decent run that's ahead. I know some of you guys are numbers guys. You always ask questions. Well, what percentage? Well, I don't know. 80%, 90%. I don't keep track of that. But what we do know is that when multiple boxes form on top of each other, you are going to have a pretty good chance that there's going to be a strong push in one direction or the other. Okay, the other thing I want to talk about is the effectiveness of these lines here, these dotted lines. And so what you'll see, in fact, let me go to the, well, let's see. Let me just see if I can, okay, this is probably a good example. Okay, so we had a box form mountain time at just about noon, 12 o'clock-ish, 11:59. And that was the last one we had for the remaining 2 hours of the market. And so the questions come through these lines here. In fact, let's extend these. You might wonder, well, why don't these extend? Well, I mean, if you shrink your bars or candles, whatever you choose to use, they do extend, but at some point they stop just because they just do. So let's do. I'm just gonna extend these lines. Oh, come on. I'm just going to extend these lines just for illustration purposes. And okay, so we have these, I'll just do those three. So we have these target lines, right? And so the question always comes in, so how long are those lines good for? Well, what you have to realize is that like any support or resistance price level, there's a certain level or period of effectiveness, meaning that price, can only bounce off that price level for, so many times before it just simply gives way. And so I've had a couple emails come in, talking about your traders talking about how they use these lines to actually trade off of, and you can do that. I won't teach any strategies to do that because the box is a lot more simplified than that. But if you are a trader and you've been trading for a while and you have a strategy, these lines are very effective. So as you can see here, we're bouncing between these price levels here pretty accurately. And so if we look at, let me change that view. If we look at that, we're well below now the purple line. And so there's no more extensions down there. And then at this point, the market's closed by that point. So let's fast forward. Okay, so there's the market close. And so at this point, I mean, I guess we kind of bounced off it a little bit, but now we're breaking through them, and it doesn't really care about these price levels anymore. And so that's kind of what I mean by effectiveness. There's a certain period of time where, and what is that period of time? I don't know. It varies. But bottom line is that there's no real answer to the question. In other words, the question is, how long are these price levels good for? Well, they're good until they don't work anymore. Okay, so just keep that in mind. So if you are a trader, meaning that you practice other strategies, then yes, you can use these price levels, but there's going to be a certain period of time where they're just not going to react. Okay, really quick, I just want to go over the ES and CL just really quickly. Just point a couple of things out. So the market open for me is 7:30. So the market opens here, which is awesome because we get this box, pretty much within a minute after market open, and I get to sit here for 8 minutes to get ready for this trade. And that's what's so nice about these box trades, is that, man, you can be ready and you can get, you should not have been negative even a tick in this trade. Okay, maybe a tick. And so, again, this is the ES. We like trading the 612 tick chart really quickly as well. I know a lot of traders are caught up on their charts. They have to use a 5-minute or they have to use a 6 range chart. Well, let me tell you this. If your objective is to make money trading, then you should not care 1 ounce what chart you use. What you want to do, and I'm telling you this, is that you want to use a chart that makes you money. Okay, and if you're going to use the box, which as you saw today, you would have, maybe you did, make a lot of money, then you're going to want to use charts that make you money. And this chart we've been using for many, many years in all types of markets. It's very effective, especially with the box. And so that's what we use. So a 612 tick chart on the ES, try it out. I don't think you won't like it. Double box, I already talked about that. So what are we anticipating? Well, we're anticipating a big push. What do we get? We get a blue arrow. Boom, we're in, and this thing runs for miles. You're going to get filled, I don't know, 1670 to 75, 70.5. And what do we cap out? Capped out at 85. So a 15-point run in the ES, taking profits all the way. Okay, and then we get a short box at 8:52 my time, another winner, and then at 9 o'clock another winner. Anyways, you guys have already seen this, so I don't need to go over this, but massive, massive day. Really quickly, let's look at CL. Okay, so on CL, I wanted to show this for a very specific reason. So as you know, so my time, the CL market opens at 7, or actually, excuse me, it actually opens at 6 Mountain Time. It opens at 7 Central Time. Anyways, what was nice about this is that we had a short at 7:10 my time, and then we had another box form, and this obviously this bar closed below it, so we got that signal. So remember, if you go back to the previous video, I had mentioned that if price, or if we get our signal and price is below, in this case the box, well, in this case it's significantly below it, there's a pretty good chance that it's going to pull back. Maybe not to the midpoint, in this case it did, but there's a pretty good chance it's going to pull back. And what I had mentioned, if you watch that video, I like to enter below the box, and I mean, this was a huge day on crude oil. If you trade this, massive day. We've got a trader who, I think I mentioned, he averages no less than $1,000 a day, and has not had a losing day since January, which is before he started using the box. So for the last 5 months, he has not had a losing day, and he averages no less than $1,000 a day on crude oil, and you can see why. This is a 5-minute on crude. If you use another chart, fine, but I'm telling you, it's very consistent. Our floor traders at the CME use this exact chart. They don't do anything different, and it works really well. So if you trade CL, I would take a look at a 5-minute chart. And again, this is a moneymaker. So that's a wrap. Again, if you're trading tonight, my goodness, you should see tonight. You could have already made a killing tonight. Anyways, we won't go over that. So once again, number one, keep it simple. We have a box form and we're looking for an arrow. That's it. Red means sell, blue means buy. Don't complicate it more than that. Lines that extend, if you trade beyond where you've gotten filled in profit, then just realize that these target levels will have a certain level of effectiveness, meaning that there's a period of time to where they're effective, and then they simply just won't be anymore. And then lastly, remember, double boxes will anticipate a large move. And it's as simple as that. If you have questions, send them to support@predictionpointtrading.com, and I will cover your questions in the next video.